title of this lesson is Angels. An angel investor is someone who invests money that belongs to them, as opposed to maybe a fund manager who is investing funds that are coming from outside sources, and usually much larger amounts. An angel investor may be someone in your family, friends that you know. They may be operators at companies, dentists, doctors, but they're usually people who have some extra money or money that they want to invest and diversify their investments, and they choose to invest in startup companies, usually at the early stages. I think angel investors are amazing. I try to convince people to become angel investors as much as possible, because I think the more people who are making investment decisions, no matter the amount they're investing, the more powerful that is. Getting more voices, more diverse voices out there is really important. And that's power, to be able to make those investments. So this could be somebody who's investing $500 into your crowdfunding campaign on a platform like Republic or WeFunder, or it could be someone who's writing that $10,000 check to help you get your company off of the ground. And it really ranges. It depends on what sort of money they have, how much they've made, and maybe family money, et cetera. But they're really just pulling from a pool of capital that they have complete control over, and they're making those final decisions. So it's cool to know some angel investors. If you don't know someone right now, of course you can work towards knowing them. But the reason you want to work with angel investors is because they're going to have early conviction in you, especially if they've worked on something similar. Maybe they've worked at a big company that does what you're trying to do, but you're trying to do it better, so they know that it's going to do well. Or maybe they want to impart some wisdom on you that they haven't been able to do any other way. So they've been around for years and years and years, and they've learned so much, but people usually at a certain age, they start to think about what kind of wisdom and legacy can I leave and impart on someone else. And one way that they do that is by making a dollar investment into a smaller company and then being helpful to them in other ways. So they're going to have that conviction for you. They're going to be flexible. They're going to be creative. A lot of them are going to be a huge value add, where some venture funds even cannot be as much of a value add. And and one thing to look out for is that they're going to, they could potentially write a smaller check and call you too often or ask you how things are going too often. So you want to set the stage early on and tell them, this is what you can expect of me, and this is what I expect of you. For instance, I would like for us to have a 1-hour phone call or meeting once every quarter. And we'll go through how things are working at the company and how you can be helpful, and you can give me feedback. Whatever that may be, you want to establish that early on, because the last thing you want to do is to be dealing with 50, 60 different people who have all different agendas, and really the time and money commitment that they've put in is not enough to warrant that. But it's a great place to start, and of course they can start making introductions to you to those later stage investors. There are a few incentives for angel investors to make angel investments. They can be anything from, like I said earlier, wanting to impart their wisdom and experience and have a sort of a second act in their life of, I've done the operating work, I've done all these things at this other company or for myself, now I've had some success and I want to help others and impart wisdom to others. It can also be they simply look at it as one of many types of investments that they make with the money they have in order to transact and make more money over time. And a lot of times angel investors have some investments they make in, let's say, public stocks, and some in crypto, and some in real estate. And they'll look at venture capital, or they'll look at startup investing as more of a long-term play, as something that they want to, perhaps it's more hands-on than any of those other things for them, but it's more long-term, and it has these other return on investment, ROI. It has these other things that come into play before there may be a financial return. And so, again, you definitely want to choose them wisely, but you also want to respect them and give them their just due, because They may not be writing million-dollar checks if they're angel investors. They may be writing smaller checks relative, but think about somebody having that conviction. You know who's a great example of a wonderful angel investor is Susan Kimberlin, who I mentioned earlier, invested in me, was my first yes for Backstage Capital. She invested $25,000 for me to invest in someone else, and she invested another $25,000 for me to invest in myself and to set up shop. Now, since then, I've raised millions of dollars, but I always go back to Susan. And I always see how she's feeling about something because she had that early conviction and she opened so many doors for me. So it's an angel investor can be truly your best friend if you know how to interact and manage those relationships. So let's say you want to be an angel investor or you want to help someone become an angel investor. One of the things that you want to think about from that perspective, that can also help you with your company, is being what is called founder friendly, which means that you're going into this whole exercise as someone who wants to give value, add to the equation rather than take away. You don't go into it thinking, how do I win in this situation? How do I call the founder every day and kind of get on their nerves and get in their space and ask them what they're doing? The way that you can manage it is you can have those guidelines up front and be very vocal about what you want, what you expect. Because along the way, what you're doing, whether you're a founder or an angel investor, anyone in this equation, you are building reputation. And so as an angel investor, you want to be known as someone who opens doors, who asks really interesting and good questions that help challenge the founder, but who does not get in their way. Because if you could do what they do, you would have done it already. What you want to do is catalyze what they're doing. And so you build a reputation. Founders talk to each other, good and bad. They say this person was helpful, this person was not. And after a while, after the honeymoon period is over, after the money is gone from the bank, right? You put the money in, $10,000, and you think everything is going well. Well, that money is fleeting. So after the honeymoon period is over, there's still so much time and relationship with that founder. And so it's incumbent upon you to as the angel investor, to keep those the relationship on par with what you said it was at the beginning, what you sold to the founder at the beginning. Because remember, it's not a one-way street. That founder can find money elsewhere. It may take them longer, it may be tougher, it may mean that they have to change course, but they can find money elsewhere. Money is just a static asset. It's nothing more. There's no power to it. There's no emotion to it. It is just a tool. And so you are the person you are as the angel. You're the one who has to give the investment itself the reputation. So in conclusion, if you're the founder, remember that an angel investor can be extremely helpful to you. They can be there early, they can be there first, they can be impactful, they can open doors that few others can. And respect that relationship, and it'll go far. As an angel investor, remember that this is a two-way street, that you become part of the bigger picture when you invest your time, energy, money, and insights, but that you also want to be additive and not taking away. You want to make sure to stay out of your founder's way, to be there when you can, and to, yes, tell them when you think there's trouble ahead. That's always helpful.